So traders, what I want to do in today's video is I want to share with you the number one pattern that forms at the top of stock market crashes. There is something that you can keep an eye out for, especially where we are right now. And as you can see on the screen right now, I've identified the things that we can really identify in the markets when it comes to, are we about to see a downtrend? Are we about to see a major top in the markets? Not just a short-term scare, but a major top in the markets. And is this going to start to form into something else, something more? And should we be worried from there? So that's what I want to share with you in today's video. Now, the reason why I'm doing this video for you is because if I bring up my trading view here for a minute, one of the things that I'm seeing with a lot of traders right now is there's a lot of volatility, right? Huge amounts of volatility, and you can see here from this daily chart perspective, huge movement through here, big move up, big move down, big move up, big move down. There's a lot of volatility that's forming right now. And so, especially if you're watching a lot of the media, then the media can really sort of lead you down the path of, okay, right? And I don't want you to lead the path of like, okay, which simply means I have no idea what's going on right now, I'm confused, and so on and so forth. So I want to, one, shed a bit of light about what's going on in the markets right now, and two, what do we actually need to focus on if we are going to form into some sort of bear market from here? Is this going to be a major topping pattern? And this is not coming from a emotional perspective, greed, fear, excited, doubtful perspective. This is coming from just a logic perspective in the markets, okay? And so I want to preface this from the way that these markets actually operate. And the reason why I'm doing this is I want to keep you calm in the mix of turmoil or volatility in the markets, because when we can stay calm, we can make good decisions and we can benefit from that. If you're very heightened emotion in the market, right? Very heightened emotions in the market, then it would be, you would be making very, very bad decisions. Now, as the more that I trade the markets, over my last 20 years of trading the markets, one thing I've noticed with myself is the more I can just keep an eye on what the actual market is doing, because remember what the market is actually doing is, and I'm bringing up this weekly chart now, what the market is actually doing is the big boys that push this market around, they create these sort of patterns. And one thing I've learned over just identifying, major tops in markets, right? So we see even back here in the top of 2021 after the COVID boom, right? We can even see back even we have the 08 period through here. Like these are what's called major tops in markets, right? Then followed by a few months of downward movement. Makes sense? And so this is what we're seeing through here. This is what we're seeing through here. So we're seeing that type of major topping pattern here, right? We didn't really get a major top pattern here. We did get a bit of a major top pattern here, and then we've obviously continued up. So one of the things is that what we can see here is whenever we are looking at the market itself, right? Whenever we're looking at the actual market itself, we need to use logical decisions about what's actually going on right now. And one thing I've realized through my time is that if we see what's going on right now, okay? Now, one of the worst things you can do is start to throw your opinions out this here, the debt bubble. Do you know how many decades now has the debt bubble been an issue? Well, lack of issue in reality, but issue in our minds, right? Oh my goodness, debt bubble is going to explode. It's going to be all over. And then 12 months later and 2 years later and 5 years later, right? So we've probably got at least another 5 more years before the debt bubble. Remember, it's the debt serviceability that becomes the issue, not the actual debt itself, right? So focus on where is the government right now when it comes to debt serviceability. That's the big thing. That's what we should be focusing on. And most people haven't been focusing on the debt serviceability, and they've been focusing on how big the debt is. And so therefore, the government has been easily covering the debt serviceability. So therefore, it hasn't become an issue yet. But it will. But looking at the markets through here, what I've actually noticed is that in an upward trend, we make these these higher lows here, right? We make these higher lows and higher lows and higher lows, and we make another higher low through here. So one thing I've noticed is that as these markets come down through here, right, as we get these sort of drops or pullbacks against the upward trend, pullback, upward trend, pullback, upward trend, pullback, right? So we can see that through there, right? We can see these major points through here. And one thing that that I see time and time again is that as long as the market stays above this high, as this is coming down through here, then we're still in an upward trend, and this is just part of the upward trend, right? Because you do get these pullbacks, whipsaws, counter trends, whatever you want to call them. You get these drops, create a high low, drop higher low, drop higher low, right? So as long as these lows, as long as this low here stays above this low here, we're still in an upward trend, right? We could even come down through here somewhere and then come back up again, and guess what? We still made what? Another higher low. So we're still in an upward trend. The danger, this is the big key we need to focus for, is when that stops. This is the number one thing we should be focusing on right now. There's so much into what this person said, and this guru said, and this guru said, and that guru said, you know, and then this fundamental said, and this fundamental. We can go down this rabbit hole of all this sort of stuff, right? And it's just a whole bunch of monkey brains, right? It really is. It's a whole bunch of monkey brains. So as long as we keep making higher lows in the markets, right? Up, down, higher low, up. Look at this here, came down very, very close to low, but look what happened. Higher low, right? Came down, higher low. What's this one? Higher low, up. Big drop down, growth scare, all that sort of stuff, and then bam, back up again. And now we're doing that. So tell me, we have these lows from here, right? Higher lows, higher lows, higher lows. Are we anywhere near breaking this low yet? Remember, as long as it's making higher lows, the most important part is a higher low. As long as it keeps making higher lows, the most important part to an upward trend is a higher low. Higher low, higher low, right? So as long as it keeps making higher lows in the market is still in an upward trend. And anything outside of that one statement is just thoughts, opinions, emotions, ideas, or even concepts that even big professionals, people been around markets for a long time, and you see David Hunter and all this sort of stuff out there, right? As long as we keep doing this, we're in an upward trend, and we're likely to stay in an upward trend. When do we actually have logical, factual, statistical evidence that things will be changing? When a low gets broken, right? We see this here, higher low. See, notice we didn't break the significant higher lows here. We just kept doing what? And this is the reason why back here, I was saying, guys, we are still in an upward trend, and we'll likely get a strong bounce out of this level here. And what most people missed on that bounce. Well, right now, we're just here. Right now, we are right here. We're nowhere near even the low. And this could just be what? We could get a little bit more downside, and then away we go again. And then, oh, there's that another higher low again. And I know this sounds so simple, right? It's like, John, but what about the debt? What about inflation? What about? Don't care. Why? Because we trade the chart, right? We don't trade the non-farm payroll when that comes out. Oh, non-farm payroll came out today, therefore I should do this today. Okay, what are you going to do tomorrow? Don't know. Right? So keep it really simple. You can keep overcomplicating if you want, but the reason why most people were scared when the drop happened last time, which is just a month ago now, and I wasn't, was because of what we're looking at here. So as long as we keep making higher lows in the markets, guess what? We're still in an upper trend. The danger is when we actually start to break the low, right? So when we do this here, when the market goes up, high, low, up, high, low, up, high, low, up, high, low, and then we actually break it. Strong uptrend, still in an upward trend, still in an upward trend, still in an upward trend. Oh, look, it broke it. no longer making higher lows. When that happens, now you should be thinking, oh, okay, this is different now. What is different? We are no longer making higher lows. And I know this sounds really, really, really simple, guys, but once you see this, you start to like, wow, I see this, right? So for me, looking at the S&P 500, look at this back here. I'm just talking about the COVID crash here. What did we have here? Up, higher lows, right? Up, there's a little bit of a high low through there. Up, higher low, up, another higher low, and then up, right? Upward trend, upward trend, upward trend, upward trend, upward trend. So we have this low through here, and now we have this low through here. Look what happened. What did the market do? For about a month or so, it came, actually for a few months, it came down, broke below there, didn't it? It broke the low. What was that telling you now? We're no longer making higher lows anymore. Now we should be worried about the downward trend. Because that's all a crash really is, right, guys? Like, let's actually be realistic here. Because what happens? We break a lower low, then we rally up for a few weeks. See what I just said there? It's not like everyday sell-off. A few week rally, then makes a lower high, comes down, comes back up, lower high, and then we start to change the tune again. All right, go back to the 08 period. When the 08 period happened, guess what? Higher lows, strong upward trend, higher low, still in an upward trend, higher low, still in an upward trend, higher low, still in an upward trend, same low, still in an upward trend, broke the low. This here is now what? The warning sign that we need to watch out for. Okay, let's go back to the that's what we should be. Right, and it's the majors, right? It's the major swing, major up, major swing, and it's like that, isn't it? Up like that, major swing, major down, major swing, major down, major swing, major down. Right, you get these little things, don't we? And now we're getting all these sort of, man, a lot of gyrations from there. But then guess what happened? As soon as we did that, significant lows were broken. And then guess what? Then we started the downward movement, right? Then we came up, made a lower highs, and then we started to roll down from there, right? So if we go back to the 08, the periods through here, look what happens, right? Look what happens. Is that we start to get what? We start to get that breaking of a low a lot of the times, right? So there's the high low 1929 and made a lower low, lower high, and then broke down, right? So we started to develop this pattern here as well. So we didn't just break the low, we then rolled over. We made a lower low, that rolls up, lower high, and then breaking down, right? Because that could be the upward trend from there. Lower low, lower high. Look at this here, slight lower low, lower high, breaking the low, big move down. Higher low there through here, but it made a lower high, breaking the low, big move down. High, lower high, big move down. We had this lower low, lower high, and then we started to see the move down. So, in the course of what we're looking for at the stock market right now, just stay calm. Just stay calm. A lot of volatility, yes. Markets manipulated, it's always been manipulated, right? But you know what? There's so many amazing trades right now, guys. Right? There are so many amazing trades right now. And the thing is that you just got to know what to look for in setups, because the individual stocks are giving you amazing high quality trades, right? You just got to know what to actually look for and not just focus on the indices, but know what to look for in a high quality setup. You can do this by getting access to a free training I'm running right now, which is, there's a link in the description there. And I can really help you and guide you through that process. So I hope this gives you a bit of guidance, guys, and a bit of just to stay calm, right? No need to worry about if we're looking at major tops in indices anyway. It's not really, we're not really any sort of scare process yet. We're nowhere near worried about this process, right? In fact, this is probably going to be some sort of significant up, down, higher, low, and then away we go.